right, everyone, let's get going. So I just want to say greetings to everyone from being back in Las Vegas, and just want to welcome everyone to the webinar, and thank you all for showing up. You guys are making this thing a huge success, and I want to thank you for that. So this is Bruce Westra with another edition of Basics with Bruce. Today's subject is basic support and resistance. I wanted to remind you all to register early so that everyone gets a seat, because so many of you are showing up, and I want to make sure that no one misses out. I also wanted to remind you, if you wanted any information on our new mentoring program, to drop me a line at Bruce W. at WealthBuilderLLC.com, and I can send you out some information about that. And the reason I bring that up is because I know that for a lot of you, it would be just the ticket to really get your trading off to a flying start and get you to where you want to go much quicker with your trading. My email address is Bruce W. at WealthBuilderLLC.com, and you'll see that again at the end of the webinar. All right, let's get going here. As usual, we start with our handy-dandy disclaimer. Please note it carefully, all the information that's there. So let's start with some definitions. First of all, what is support? Well, support tends to act as a price floor. It's a price level that prevents the price from moving lower. It's the price level where buyers tend to step in and drive the price up or higher. So that is support. Kind of think of it as the floor, a price floor. And then the definition for resistance. In contrast, resistance tends to act as a price ceiling. It's the price level that prevents the price from moving higher. It's the price where traditionally the sellers will step in to drive the price lower. So resistance is where the sellers step in and drive the price lower, and support is where the buyers step in and tend to drive the price higher. So with this slide, I wanted to kind of point out 4 concepts of support and resistance, kind of in picture form. The first is how support acts as a price floor. You can see how a market was trading down over here on the far left side, and then it hit support, bounced up, and came back down, bounced up, came back down. You can see how support kind of tends to act as a floor. The second is how resistance tends to act as a ceiling. You can see from support, the price bounced up, hit resistance, then went down, back up, down, down, and finally went through. So resistance, the concept of being kind of a ceiling; support, the concept of being tending to be a floor. And then now let's note how resistance becomes support. Now, this is kind of a bullish trend here. So you can see where resistance, after the price breaks through resistance, now that same level becomes support. So the price is supported at a higher level, and 2, the resistance moves up, the ceiling is now at a higher level. So we had support, the price traded up, broke through resistance, and then now we have new levels of support and resistance. All right. And the fourth concept is not easily seen here. We'll point it out more later. But the concept is, how many times does the price hit support or resistance before it breaks through? The concept being, the more times that it hits, it typically will have a stronger breakthrough the more times that it hits. So for instance, if the price would hit resistance a number of times, the breakthrough will tend to be stronger than if it just hits a couple times. So those are the four concepts that I wanted to kind of point out in picture form. Here we have support and resistance chart. It's an actual chart of the pound dollar on a weekly, but these concepts and principles hold true in any time frame, from 1 minute to monthly. They're more true the longer the time frames are, but they still are applicable to any time frame. So here you can see where support prevented the price from moving down, acted as a floor. Resistance was acting as a ceiling, and then price eventually broke through and new levels of support and resistance were formed. Same thing happened here, and broke through, and again new levels of support and resistance were formed. And it kind of points out the fourth concept that we were talking about a little bit earlier. See how many times the price hit this area of resistance? 1, 2, 3, 4, 5, 6, 7, 8, 9, and about the 10th time it broke through. So it then resulted in a nice bullish movement from that lower level of support. Pretty cool, eh? Here we see a chart of Lucent Technologies. Kind of gives us a picture of some pretty dramatic breakthroughs. We see support here. It hit it a number of times, and then finally, for some reason, we don't know what, it broke through with a dramatic drop in price. And then it traded at a lower level with support down here and resistance up here, and then it broke through and actually had a pretty dramatic gap up, and again formed a new level of support and resistance. Here I wanted to show you that support and resistance levels are usually not terribly precise. They fall into zones, kind of support and resistance zones. And I kind of pointed out here this level of resistance, the zone that these two lines made. I just kind of pointed out the lower area of resistance, and then the higher area of resistance, kind of a zone, if you will, maybe of, what is that, 50 pips? And then 2 on the bottom here, the support. Here we have a zone, kind of the higher of the 2 levels here, and the lower of the 2 levels, forming a little bit smaller zone, maybe about 30 pips, but still a zone rather than a precise line. So just want to point out the zone concept here too. Maybe that should have been my 5th concept of support and resistance. But support and resistance levels are important because, as Courtney says, that's where actual buyers and sellers came into the market and put down money. And when people do that, we need to pay attention to those levels because those levels are important, because that's where actual money was put into or taken out of the market. So we need to pay attention to those. Homework. So I have some active homework for you this week. This is working on your pro real-time charts. What I want you to do is pick up any chart. You can pick a Forex or futures or a stock chart, whatever you like, and take off all your price channels. And then do as I did and put in your support and resistance levels. Form your zones. And then add the channels back in. And observe then how the price channels and support and resistance levels match up. Kind of look like this. Here's a chart with the zones put in, but the price channels are removed. And then here I added the price channels back in. And I use 55 and 20-day channels because I use Courtney's trading methods. But you'll notice how uncanny it is that the price channels match up with those support and resistance lines. And to be totally honest with you, I was playing around with these charts and came across your homework assignment by accident when I combined these two charts. But I thought it would be a good exercise for you because it shows how these support and resistance zones match up with the price channels, because these are levels where actual trading is going on. And again, very important, we need to pay attention to them. So as always, you can send me your questions. This is the link here, Bruce W. at WealthBuilderLLC.com. You can always get more information about Courtney Smith at www.wealthbuilderllc.com. And before I leave, I wanted to ask you guys if you had any ideas or pressing topics on your mind that you wanted me to discuss in the near future. And if you would just type those in, then I can capture those and actually make up some webinars for you to discuss those. So if you please type those into your question spaces tonight, that would be great. Okay, I got hot hands, PRT. To start with, Catherine, yes, there is a way to catch up. The webinars are posted on YouTube. Just search YouTube for Basics with Bruce and you'll see them posted there. So good. What we want to do, Yogesh is asking how we identified support and resistance. And let me see if I can do that with you right now. So what we would do is when we see kind of a sideways moving market, we would, for resistance, we'd go to the top of that sideways market and just put a line on the tips of the price bars for the uppermost tips and kind of for some of those on the inner tips. So you would kind of go to the very top of that sideways market, and then I guess you could say the next lower level, so that you get kind of an idea of the zone of resistance. And then the same thing for support. You'd go to the bottom of that sideways moving market and put a line in that zone for the lowermost tips of those price bars, and then kind of the second zone of support. And that should give you some nice support resistance zones. maybe I should do a PRT webinar on how to use the tools in PRT. How does that sound? So good. Got some support for that, using the tools. Maybe a lot of you want some PRT instruction. How about if I did a webinar on really the basics of PRT from when you log on to how you can clean up the charts and kind of get started using the tools. Maybe I'll do that. I get a lot of support for that, so good. Good, good, good. All right, so maybe that's what I'll work on for next week. Very cool. All right, you guys. We see the Greeks, deltas, gamma, theta, vega, etc. Okay, maybe I could spend a little time on that. Okay, good. Excellent. Very good. So that's all I have for tonight, unless I have any other questions real quick. I'm going to jump, and it's been a pleasure tonight. I think we got some good ideas for some future webinars, and I hope that you got a really good idea, basic concept of support and resistance. All right, that's all. Have a good week, and see you next time. Bye-bye.